Hello and welcome to the virtual classroom where today we'll be discussing the accounting cycle a little bit further. We'll be looking at posting and the unadjusted trial balance. So at this point in the accounting cycle, we've analyzed our source documents and we've applied double entry accounting so that we can properly record our transactions through the journalizing process. Now it's time to get a listing of all of our accounts and their individual balances for the month. And in order to be able to do this, we have to go through the posting process. And that end result that we're looking to get is called the unadjusted trial balance. So with posting is the process of transferring information from the journal to the ledger. So what we have listed here on the left is a sample journal with 5 transactions. And we're going to walk through the posting process by comparing the journal to our ledgers. Our ledgers are the documents or the electronic files that contain the information about a specific account. So if I want to know what happened to the cash account during a certain period, then I would go to the ledger and I would see a listing of all the transactions that happened to the cash account after the posting process. We use those ledgers at the end to help us calculate our balances, and then those balances will be transferred to our next step of the accounting cycle. So let's look at posting in terms of this first transaction. So with our first transaction, we have cash being debited and J-Cool Capital being credited. I have my cash ledger listed here. So I list the date of the transaction. The explanation goes in this second column here under description. And then we debited cash, so we put in the $4,000 in the debit column. Then I move on to J-Cool Capital and I pull this $40,000. And that $40,000 was credited to J-Cool Capital. So again, I list the date, the description or the explanation of the transaction, and the amount. If this is, of course, the only transaction for capital during the period like this one was, then we calculate the balance, but typically we don't calculate a final balance at the end here until we're completely done. After every single transaction, we do calculate an initial balance. Second transaction where we're debiting equipment and crediting cash. Notice that in the equipment ledger, we're putting the $5,000 in the debit column. We put in the date and the description, and then we calculate a balance. We do the same thing for cash. Again, we have another transaction that is related to cash. Now, typically in the posting process, we want to include a post reference column, which is this column here. And each ledger will have an account number at the top of it. Assets are typically 1. This is taken from the chart of accounts. Assets typically begin with the number 1. So it could be a 3-digit code, a 4-digit code, depending on how large the company is. Liabilities begin with number 2. Capital begins with number 3, typically capital and withdrawals. Then we have revenues as 4, expenses as 5. And in those situations, we need those account numbers because listing the account numbers in this column called the PR or post reference column shows the user of the journal that these transactions have already been posted. So we don't end up posting twice. For the next transaction on December 1st, again, notice we debited supplies, we credited accounts payable, and we see that happening in our ledgers, and we calculate our balances. Don't forget to include that description. And if we had an account number for these, we would list that account number in the post reference column. 1220, we do the same thing with utilities, expense, and cash. We calculate our balance after putting utilities expense in the debit column for the 500. We put in the explanation, we put in the date, and we do the same thing for cash, only cash was credited this time. So we can see the balance of cash going down. So after every single transaction, we can see the effect and the impact on cash. Now, in the real world, posting is done with a click of a button. With some software packages, it is done through online real-time processing. So as soon as you enter the transaction, your ledgers are automatically updated. Your financial statements get updated, your trial balances get updated. So it does make life a little bit easier. In the classroom, Posting is a tedious process. A lot of times, instead of using ledgers, we could possibly use T accounts by setting up T accounts for every individual account. But in the real world, it really is a lot easier. You click the button, posting is done for you. So we have one more transaction here with accounts receivable being debited and services revenue being credited. Again, we list our date, our description, and we put the numbers in the proper columns and calculate our balances. So with our ledgers being completed, we can now create what's known as an unadjusted trial balance. An unadjusted trial balance is not an official financial statement. It is a report that is used to give us a listing of all of our accounts and their individual balances. So we're listing every single account that we had included in a transaction here that has a balance, and we put the numbers in the proper columns. And the numbers are just our ending numbers, our balances here. The unadjusted trial balance, the accounts on the unadjusted trial balance are listed in a specific order, in the order of our accounting equation. So we have assets going first, and then we have liabilities, capital, withdrawals, if we have any withdrawals, revenues, and then expenses. So we take the balance of cash. We know that all assets have a normal debit balance. Now, I could have a credit balance for cash, but then that means we actually owe some money. But we know that this balance is debit because we had more debits coming in than credits. So we list the number and the account title. Make sure we put that number under the debit column. We do that for all of our assets. And then we move on to our liabilities, and notice that liabilities have a normal credit balance. So our number is moved over here. And we also list our capital and our revenues. They have normal credit balances as well. But then we pop right back over here for utilities expense because it does have a normal debit balance. On our unadjusted trial balance, again, it's not an official financial statement, but because it is a report, we do have to include proper formatting. So that includes a proper heading, including the company name, the title of the report, and a date. We include commas, single and double underlines to ensure that debits equal credits. The double underlines lets us know that we've proved that debits equal credits. Now we know after we recorded every single transaction, we ensured that the accounting equation was still in balance. But when going through the posting process, we can very easily make a mistake. So we do this trial balance to ensure that debits still do equal credits. We also include dollar signs by the first number in the column and the last number in the column, not by every single number. So that takes care of the posting process and the unadjusted trial balance. If you have any questions or you need to see additional examples or sample exercises, reach out to me in the comments. I would love to hear from you. Thank you for your time and attention, and I hope you have a wonderful day.